How significant do you believe December's consumer inflation data is, especially given that it landed pretty much in line with all the forecasts that are out there?
Well, as your excellent report leading into this suggested, the numbers here that came out today were largely expected by the markets. And as your correspondent said, markets really kind of reacted to this information with a sigh. But in reality, I think everyone has a chance to use this information to support their pre-existing bias. If you think that inflation is getting better, you can point to the fact that inflation is lower this year than last year, and it's much lower than it was in 2023. But if you think that inflation is still too high, you can point to the fact that the 2.7% inflation announced today is higher than the US experienced between 2000 and 2020, and it's higher than the 2% target that the Fed has set for itself. You can also point to the fact that certain core goods such as food and housing continue to outpace overall inflation. So perspective, of course, is always important in how people interpret economic data, and that's particularly true nowadays.
Yeah, and Todd, this is information, though, that looks back rather than looking forward about where the economy could go. But I'm interested how this final CPI report of 2025 shapes the tone and the expectations going into the Fed's next interest rate meeting.
Yeah, so once again, as your report suggested, the role that Donald Trump is playing in this cannot be understated. Trump has injected himself into every decision that the Fed makes, in part because of his constant talking in the media about Fed policy, and then also the recent legal threats. And so, Trump's response to today's new information was that this is an argument that the Fed should cut interest rates. And I think a reasonable person could make that argument. However, the Fed might feel that they can't cut rates because it's more important for them to protect their reputation for independence in the long run
Mm.
than it is to stimulate the economy in the short run. And so this is the real conundrum that the Fed faces, and it leads to a lot of uncertainty about what the Fed is going to do in 2026 and what's going to happen to inflation. It's exactly why economists have long argued that central banks should have independent decision-making
Right.
processes that are independent of the political process, because the disappearance of credibility leads to a loss of confidence that keeping inflation low is the central bank's #1 priority.
Yeah, I think it's going to be interesting, too, once Jerome Powell's term runs out and Trump appoints a new Fed chief, where that is going to go. But also, let's talk about how consumers actually feel right now, because consumer sentiment can really have a huge effect on the economy, even though the numbers, the information out there may tell one story. If people feel they can't spend money, that's something entirely different.
Yes, and everything suggests that consumers feel like life is getting less affordable. Um, Even though the overall data is not nearly as clear cut that there is an affordability crisis, the fact that this idea has kind of caught on with people and consumers in the public does suggest that there's something to it. And if you look more closely at this report today, you see that some of the core things that people are most likely to worry about on a day-to-day basis are rising faster than the overall cost of inflation. Food rose at 3.1%, largely because of the tariffs that have been imposed by the Trump administration.
Hmm.
Housing continues, as your report mentioned, continues to outpace overall inflation. And prospective increases in medical care costs that are looming in 2026 because of the expiration of Obamacare subsidies is something that is, definitely increasing the affordability anxiety of many households in the US.
And as we saw in the markets today, investors are jittery, even with good information coming out in this first earnings about the banks. Talk about some areas of the economy where inflation remains stubborn.
Well, I'll first just talk about a good area, which is gas prices.
Yeah.
And gas prices played a very big role in keeping this overall inflation number down. But as I mentioned a minute ago, food, um, items such as coffee have risen by 20% relative to last year. Jewelry, watches, tools have all risen significantly, largely because of tariffs. Housing continues to outpace inflation. And then, as I said, particularly looking forward, what's going to happen to medical costs?
Right.
I think is a uh, real challenge for American households.
Okay, what are the key risks that could push inflation higher in 2026? What are you keeping an eye out for? You talked about healthcare, but certainly there's a minefield out there right now.
Healthcare is a big one, but I think, as you mentioned, the fights that Trump continues to have with the Fed, both with the existing Fed chair and with Trump's opportunity to appoint a new Fed chair. Um, Central bank independence keeps inflation low, in part because it keeps expected inflation low. It gives people confidence that inflation will remain low now and in the future. When markets lose the faith in the ability to keep inflation low, this begins to impact how they behave. It begins to put upward pressure on inflation. How does the Fed respond to this crisis of confidence in their independence? This is really the $1 trillion question
Yeah.
when it comes to 2026 in terms of inflation and monetary policy.